Philips' annual order intake has increased for the first time in 3 years. Yes, we're focused now on the earnings story. That's as the Dutch medical equipment maker mostly resolved issues related to its faulty sleep apnea machines. Robust demand in markets, including North America, offsetting persistent headwinds in China. Very pleased to say joining me now is the Philips CEO, Roy Jakobs. Roy, good morning. Thank you for joining us on a busy day for you and the team. So comparable order intake growing 1% last year. That is the first annual growth since 2021. What percentage growth are you targeting for this year?
So we were indeed very happy to see us returning to positive order intake growth, which, as you called out, was with a slow China and a strong order intake of 4% in the rest of the world. Now we have, for this year, another positive order intake year ahead of us. So that's what we are targeting. We're also seeing the momentum continuing in the rest of the world. We see still China continue to be slow, but China for us is a when story. So when it will be back, there will be growth and there will be margin because it's an attractive market in the long term. Needs healthcare, and also consumers will come back, but that's currently still not exactly clear when that will happen. But we are dialing down on delivering the innovations across the world, and there we have seen good markets like North America, where we were close to double digit in the year. So you see that there's really a two-speed world currently that we are tracking on.
Okay, two-speed growth. Let me push you, Roy, on the order intake outlook for the rest of the year. You see that growing. What are we talking? Are we talking 1%, 2%? You achieved that in the fourth quarter. How many percentages of order intake growth can you expect in 2025?
Yeah, so we have not given an exact number. We say we will continue with positive order intake growth. We also expect it will be a similar combination of still a slower China and positive growth outside of the world. But we have let it there for now. Based on that, we also will deliver growth in sales. And that then also helps us to expand further our margin by another 30 to 80 bips. And deliver strong cash, which also actually, based upon our cash realization in 2024, has given us the ability now to get back into dividend and offer a dividend in cash to our shareholders.
Let me get to the tale of two markets then. Double-digit decline in China. To be clear, Roy, you do not see the Chinese market turning around for Philips in 2025. This is not a 2025 story.
So what we said is that for sure, for the first half, we see the momentum continuing that we had in the second part of 2024. And that was indeed slow consumer demand, and we saw still slow procurement in the healthcare side. Now, we also know that China is working its way back into economic growth, as well as we know that they're working through the reforms in healthcare. So we expect it will come back. We just don't know exactly when it's going to happen. So therefore, we are not running ahead of that timing, but it will come back at a certain point in time. Now, in the meanwhile, we are dialing up the engine and indeed deliver the innovations to the rest of the world. As I mentioned, we're next to North America. Also, there are good growth engines in Saudi, in Indonesia. We also see pockets of Europe where actually growth is coming back. So there are other areas we will go after the growth. And we have been really strengthening our fundamentals. So we've been launching exciting innovation, AI fueled, that will help us to deliver the growth and also deliver in China local for local products when the demand turns back.
How big is the China market for Philips now?
Around 10% of our total revenue. So it's still sizable. And we also expect that to continue. But we have also the other 90% to play for. And that's a great combination of different markets. Latin America, for example, was a great positive story last year. They had a few challenging years before that. They came back strongly. So we see the CapEx environments in general strengthening across the world. We saw that in the US where they came out of a negative 22 for the hospitals. 23 was already stronger. And now in 24, we saw that really picking up, and therefore they're investing more because the queues in healthcare are still big. The need for healthcare is growing, and therefore we also expect that demand for our innovations that are really relevant for them will continue to be there.
So what assumptions, Roy, are you making about the tariff impact when it comes to your outlook, particularly with that focus on the key North American market?
So we have included the tariffs that currently are known and put into force, and those are the tariffs between US and China. So those we have been catering for. We also, as part of the plan, have been really working through the last 3 years to really strengthen our supply chain, further regionalize it, making it more robust, also adapt it. We don't speculate of the rest of tariffs, but what we do advocate for is that patients are really taken central when we talk about tariffs, because it has an impact on supply chain. And we have still a short-lived memory from the COVID crisis, where with the breakdown of supply chains, we had massive shortages in providing care to our patients. So patients first when we think about tariffs, but at the same time we take also destiny in our own hands by really working the supply chain and going into more local for local delivery, because that is the trend. Healthcare is global, but delivery needs to be more localized, and we're working that.
Does it mean you may have to put up prices, or do you absorb the cost and you absorb the squeeze on the margin?
So at this point in time, we are working very strongly on productivity. So, for example, we have been delivering 1.7 billion of productivity in the plan to date. We are expanding that for next year to 2.5 billion productivity, so that actually we can deal with costs and continue to invest behind innovation. So we spent 1.7 billion of innovation, whilst we at the same time also saved 1.7 billion of productivity in the same period. So actually that is the way how we continue to innovate and deliver exciting innovation, especially now also where AI is really an important new technology to deliver a great value, like for example some of the launches that we had that are fueled by AI. Yeah. That's the way how you can deal with tariffs and other cost increases.
Roy, are you re-looking at the portfolio of businesses right now? In January, you agreed to sell the emergency care unit to Bridgefield Capital. Are you looking at further divestments?
So we continue to look at how we move Philips forward. And in that, we actually scale the innovations that we believe are the ones that have the best potential for the future. Now, the emergency care business was a smaller business, so it didn't have that big scale potential. The portfolio that we have with imaging, monitoring, interventional, and personal health, we believe are four very strong pillars. And then actually they are all supported with a very strong informatics layer. So those are exciting portfolio blocks. They're all delivering value to many customers in the world. We have leading positions in that. We also keep innovating in each of those pillars. And those are the ones we also take into the future.
Roy, before we let you go, are you ready to re-enter the US market when it comes to those sleep apnea devices? Where is that DOJ investigation right now?
So on sleep and respiratory care, actually we had a great year in 2024. Outside of the US, we could return back into the markets, and we saw that really resulting in growth in sleep and respiratory care. And also we had strong profit delivery in sleep and respiratory care, which was the first year indeed after the recall. We closed the litigation, as you know. DOJ investigation is still going on, but we are actually excited about some of the new innovations, and we just got 2 new approvals and 2 new masks that we're bringing into the market. So actually SRC is coming back as an engine, and we are working behind that.
Philips CEO Roy Jakobs, thank you. On the back of those earnings, order intake for Philips, comparable order intake growing for 1% last year for the first time since 2021.